All right, good afternoon, folks. This is your free video update from seasonalswingtrader.com. Today we're going to take a look at soybean meal futures, ZMH8, traded at the CME. And notice here we're looking at a daily chart, and we've got a 52-week swing high here at the 347.5, a 52-week swing low here at 298.30. So we drew a basic Fibonacci retracement level, and we noticed a chart pattern developing at the 50% retracement. Notice that this is a head and shoulders top pattern at the 50% retracement. Now, historically, these patterns are not as great at the 50% retracement level as they are at the 52-week high or 52-week low, the low being the inverse head and shoulders pattern, but they are still noteworthy. And then if we compare that from a seasonal perspective, you can see right around at this time, the 5, the 15, and the 30-year seasonality patterns point lower to the downside. So what our members are looking at here are a couple of different scenarios, looking for a high probability trade in our favor. Here we've got a head and shoulders top at the 50% retracement level. We have a trend line break here at the 382. We've got price breaking the trend line here at the 382. Also, the price action closing down and below these move averages, leading us to think that we could be heading down to the 295 or the 3-cent level. Now, how do we know that? Well, our profit objectives on head and shoulders are always from the top of the head down to the neckline. So the top of the head here is 335. The neckline here is 315, so that's a 20-cent move here from 335 to 315. We simply deduct that 20 cents from the neckline to give us our projected profit target, and that's going to be down here at the 295. We'll notice that is the swing lows, which is also multiple areas of support. So what does that mean here? Well, what it means is we get short here at 315. We're going to be targeting down here at the 295. That's a $2,000 per contract move. Our members will be looking to trade options and option spreads. So here, looking at the March contract, the March underlying, looking at the March expiration, that's 223. Most likely, when this trade triggers and when we're notified here on the close below 315, we'll look at the strikes here. We'll most likely be buying the 320s or the 315, so anywhere at the money or slightly in the money, as close as possible, and then we'll look to spread that contract out with our profit target objective. So we'll be buying the 315s, selling the 295s for whatever price that spread is going at that time. Our maximum profit objective on the trade is through 295, so that's $2,000 less the premium paid for the spread. Alternatively, you can buy the puts outright, buying the 315 or 320 puts outright, and exit once we reach our profit objective at 295. So that's what we got on tap at Seasonal Swing Trader. If you want to take a trial or join us, please follow us on Facebook, Twitter, Instagram, and YouTube, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.